This is Jim Frias with IQ Sense. Today, over a cup of coffee, we are going to discuss ESG investing and how it's pretty much shaking things up in 2023. It's becoming a little bit more of a polarized argument, but we're going to explore the past, the present, and the future. And overall, we're going to find out what it means for your portfolio. ESG funds have gained tremendous amount of popularity over the last few years. Assets under management have hit record levels since 2020 through the end of 2022. Social movements like the Me Too movement in 2018 and the Black Lives Matter movements have sparked public outrage over police brutality and sexual violence against women, have inspired retail investors to seek investment products that align with their social values. In 2023, the ESG focus has shifted towards reducing the world's dependency on fossil fuels and overall for corporations to reduce their carbon footprint that align with net zero emissions. ESG investing has become a divisive topic among professional investors, which have openly criticized the ESG investment funds and products as being a scam, fraud, or marketing ploy of greenwashing. In Europe, ESG investing is 10 times the size of assets under management than the US. ESG integration is more widespread across Europe. Across the board, Europe is leading the way for ESG implementation. It is requiring all financial products to disclose their ESG integration that meets European sustainability goals. In other words, it's a standardized regulation of ESG metrics, aka SFDR. The biggest argument against ESG investing is not having a benchmark of metrics or data that can truly translate into an analysis of a company's impact on the environment, society, and corporate governance. Some ESG factors are difficult to quantify due to the opposed viewpoints. However, research firms like Morningstar and the largest asset manager, BlackRock, have created screening tools that help investors make better informed investment decisions that align with their social values. It is important for you not to dabble into the polarization of the ESG argument. What is important is for you to understand your financial goals and what you want to save for. ESG funds are simply a product built for socially conscious investors to have alternatives and options, flexibility in their investment goals. And in addition to understanding your financial goals, what is important about ESG is understanding ESG integration and how it possibly can impact your investment portfolio. Because ESG now, for example, is changing how businesses conduct their own business. They're changing their business models in order to fit social values, corporate governance, and as of 2023, the importance to meet all these accords of net zero emissions. Ultimately, the carbon. The biggest things in 2023 that's being scrutinized is banks, commercial banking, and lending to capital expenditures for oil companies, new oil exploration and extraction, meaning drilling sites, new drilling sites. So some banks, popular banks, have taken into account that concern by investors, by their actual clients, and they are working around that where they are not funding or financing any new project with regards to oil extraction or any company that does not have some type of long-term sustainable moving to a net zero carbon emission. So, for example, income investors may be affected if banks change their financing or who they finance to, because that means these profitable loans will now have less revenue. Less revenue is less profit. Less profit has this effect that ultimately investors will not receive dividends or will receive a lower payout dividend. What will replace banks in the future, still a lot of unknowns. We don't know exactly what will replace banks per se if they were to their sector being reduced, because ultimately they're not as profitable and they are not paying consistently that how they have paid the last 20, 50 years, so forth, except for 2008, that was totally different. But banks have showed they do come back and they do provide that steady, consistent dividend that allows investors to rely on them. Banks is just one example of how your portfolio will be impacted by ESG integration. So again, just to remind you, it's important to understand not to dabble in the polarization of this ESG argument. However, understand the impact of ESG integration. The US will ultimately follow in the footsteps of European regulation with regards to disclosing ESG criteria. Now, what the investment universe is going to look like 10, 50 years from now, that's a whole different topic.